What's up everyone, it's Austin Rutherford. You're out there looking to buy your first rental property, but you're overwhelmed because there's so many loan options out there. You don't know what's good, what's bad, what types of fees you should be paying, what type of interest rate you should be paying. It's a lot of information to take in when you're buying your first rental property. The crazy thing is every lender usually has slightly different terms. So you really got to be able to understand what you need and what you're looking for, what the goal is, to be able to go out there and find the right type of loan option for you. So in this video, I'm going to be covering 4 different ways that you can get financing for your rental properties. And make sure you smash that like button for the YouTube algorithm. It'd be greatly appreciated. And just remember that these loan options do change sometimes. So this is November 2021, and these are what they are currently. Again, they're ever changing. So the first loan option out there that most people end up using are called Fannie Freddie conventional loans. So what these are like any big bank, right? The Chase, the Wells Fargo, the PNC, all these banks that go out there and write loans for you, they all fall under the Fannie Freddie conventional loans. Also brokerages. So there's like brokerage houses. They're people that write mortgages just like the banks do. But the thing is the banks and all these brokerage houses sell these to the secondary market. And the secondary market has the same buying criteria. So the terms on them are basically going to be the same minus a couple fees on the front end. So these are normal terms. Again, some of these change slightly, but for a Fannie Freddie conventional loan, you're going to get a 30-year amortized loan, meaning that you're going to make payments on it every month for 30 years. The longer the amortization schedule, the lower your mortgage payment is. So if it was a 20-year loan, your payment would be way higher because you got to pay it off in 20 years instead of 30 years. So these loans are 30-year amortized loans. It's a 30-year fixed rate, which means that the rate of this loan is going to be fixed for 30 years, which isn't normal for a lot of other loans. The good thing is that the rate's fixed, right? A lot of other loans have adjustable rates, meaning that the rate will change in 5 years. We're at the lowest we've ever been with interest rates right now. So 5 years from now, my guess is that the interest rates are going to be much higher. So I want to lock in my interest rate as low as possible right now because I don't want to pay some crazy interest rate 5 years from now. So 30-year fixed rates are great mortgages. You are personally liable for this loan and they will loan you the money in your personal name. So you cannot get a loan inside of an entity, inside of an LLC. They only loan it to you personally. And when you're buying these as an investment property, as a rental property, you do need a 25% down payment. So if it's a $100,000 house, you need to put 25 grand as a down payment and then they'll finance the other 75%. The interest rates as of today, which literally change every day, are roughly 4%, give or take. And the one caveat to this is you can only have 10 of these mortgages. So if you get more than 10 of these, you cannot get financed for an 11th one. So what you need to do after you have 10 of these, which in my opinion, these types of mortgages are the best types of mortgages, except for it having to be in your personal name instead of an LLC. But the terms on these are great terms, but you can only get 10 of them. So after 10, you will have to go elsewhere to get a mortgage, which we're going to be covering here in 1 second. So the second option, maybe after you get those 10 mortgages, you have to go to something called a portfolio lender. So what are portfolio lenders? These are small local community banks and or like hedge funds or other sort of brokers that broker loans and sell them to different markets on the back end. So the cool thing with this is when you get a portfolio lender, each bank has different terms. So one might be amortized over 15 years, one might be 25 years, one might have a 3-year adjustable rate, one might have a 10-year adjustable rate. They're so different. So I'm going to go over what some of them could be, what I look for. So once you do start looking for portfolio lenders, you at least know what the type of terms that I'm looking for that I think are good. And then you can go out there and try to negotiate those terms with those lenders. So with portfolio lenders, you will usually get an amortization schedule of anywhere from 15 years to 20, 25, or 30 years. I personally look for at least 25 years, 25 to 30 years, because the longer the amortization schedule is, the lower your monthly mortgage payment. So I've had people tell me 15-year or 20-year terms, and I don't go with those lenders because I don't like it. I don't want to pay that much money. So I look for 25 to 30-year terms. The next thing is fixed rate. these portfolio lenders are adjustable rates, unlike the Fannie and Freddies that we just talked about. So, which means that the rate will be locked for a period of time, and then it will adjust once that time period is over to whatever the then current interest rate is. And remember, we're at the lowest interest rates we've ever seen in history. I don't foresee interest rates going lower. I see them going up. So I'm trying to lock in interest rates as long as possible. But you can get an adjustable rate for anywhere from 3, 5, 7, 10, 15, or 20 years, right? Normally it's like 5 years is what most lenders will offer. I'm looking to get minimum 5 years. There's a lot that do 3, so try and get at least 5, and ideally like 10 or 20, because again, in my opinion, these are the lowest interest rates that we'll ever see in our lifetime. I could be wrong, that's just my opinion. Then the interest rate today, again, November 2021, are roughly 4 to 4.5% for these types of loans. So again, I don't think the interest rates are going much lower than this. They might go down a tiny bit, but they're not going to 1 or 2%. So I'm trying to lock in these rates as long as possible. Now, these lenders only lend to LLCs, and you personally guarantee it, but you are able to get loans in LLCs, which means that you could potentially have less liability if you structure it the right way. Definitely talk to your attorney to make sure you do this, but you can get loans inside of your LLC. And these lenders do require a 20 to 25% down payment when buying property. So if you're buying a $100,000 house, you still need $20,000 to $25,000 as a down payment. The good thing with portfolio lenders is you have unlimited loan amounts. There's no government regulation saying that you can only have 10 like you do on the Fannie and Freddie. With portfolio loans, you can literally have as many as you want. The third option is something called FHA loans. The catch with this is these are owner occupied loans. Again, we're sitting here talking about rental properties, but these are owner occupied. The cool thing about this is that they'll finance anything from 1 to 4 units. So you can buy a 4-unit building and live in one of them and then rent the other 3 out. And these terms are going to blow your mind. So pay attention. By the way, this is how like people say they live for free. House hacking is by living in one of the units and renting the other units out. Now, for these terms, it's a 30-year amortized loan, a 30-year fixed rate, just like the Fannie Freddie conventional loans. The interest rates are like 4-ish%, give or take right now at the end of 2021. But the awesome part about this is for conventional, Fannie Freddie conventional and portfolio, you need 20 to 25% as a down payment. For these FHA owner occupied loans, you need a 3.5% down payment. So let's say it's a $200,000 duplex. You need 50 grand for the other loans to be able to get into this house. For this one, you need $7,000 because it's only 3.5% down payment. Way different. So if this is one of your first deals and you're looking for a house to live in and rent and make money, an FHA loan could be amazing for you. Last 2 bullet points on this, you are personally liable. It's a loan to your personal name. The second bullet point is you can only have 1 of these loans at a time. So you can only have 1 owner-occupied loan because you can only owner-occupy 1 property at a time. The fourth option is called seller financing. So this is like some of the coolest and most creative thing that you can do. You can literally negotiate whatever terms you want, literally any of them. So to give you an example, and then I'll break into the details. We're doing a deal right now. We're buying the property for $3 million. The bank is giving us 85% loan to value on the deal. So the bank's going to give us $2.55 million, which means that our down payment would have been $450 grand plus $150,000 for the renovation needed. So what we're actually doing is we're getting the bank to finance the 85%, and then we're getting the seller to take their $3 million, but lend us back 600 grand to cover all of our down payment and renovation costs to fund this deal. So we're doing a $3 billion plus deal with none of our own money, using a portfolio loan on the front half and seller financing on our down payment side, on the gap side. And it's a 12-month note at 12% interest. But I've seen these types of loans before with no interest, with 3 years, with 30 years, with no payments. I started this out with, they can literally be whatever you negotiate. You can negotiate whatever terms you want on these as long as the seller agrees to them. The only thing is you just have to find the right seller that's open to lending you the money. So usually these are more sophisticated types of sellers. But I've seen all types of properties, single family, commercial, apartment building, all of them get some sort of seller financing from time to time. So it is possible, you just gotta find the right person. So as you can see, there's a lot of different options out there. And my biggest lesson that I learned from this is I always thought like if somebody told me something, like that was the only way of doing it. What I learned is if they don't tell you what you want, if they don't give you the terms that you want, ask the next person. If they don't give you the terms, ask the next person. If they don't give you the terms, ask the next person, because somebody out there will give you the terms that you want on these deals. So comment below. Let me know what terms you want or terms that you've gotten in the past. While you're down there, make sure you smash that like button for the YouTube algorithm. It'd be greatly appreciated. Hit that subscribe and notification bell so you can get all this content going forward. As always, appreciate you being here. See you on the next one.